Welcome back to Trading 360. I'm Nicole Petalides, live in New York City, live at the New York Stock Exchange. It's time for the big three. Three stocks, three charts, three trades. Rick Ducat will take us through the charts. Here to take us through the trades is Scott Bauer, CEO at Prosper Trading Academy. Scott, thanks so much for coming back. Rick Ducat's been doing a great job with the charts all week. Thank you both on this Friday. So AMD is your first name here. Tell us, Scott, why this one jumps out at you.
Yeah, and absolutely this is buying into the face of a steep sell-off, right? We're looking at all the semis here, the semi sector, very weak. The outlook has been downgraded, if you will. We saw news coming out of Micron. But when I look at AMD, Nicole, I'm looking at some very big technical support. If you go back, over the last year to 18 months, and then even going back about 2 years, to mid-2020, there is so much support in the 72, 73 area, and there's actually a gap fill, something that we talk about also in that same area from July of 2020. So from a technical standpoint, I really like this stock. Fundamentally, it's hard to say, okay, bullish, bearish, just because of the overall sector. But I really think that with the sell-off we've seen across the board in the semis here, this is the one to me that stands out among all of them, especially just because of all of that support in this area right now.
Right, and I mean the SMH had the worst start to any year since its inception. Yep. So as you made the point, I mean this group has been beaten down, but there could be opportunity here. Rick Ducat, what do you think?
Well, it's definitely not a pretty chart like many of its peers in this industry. It's kind of a rougher time for semiconductors as a whole right now. And looking at the chart, we can see that AMD has been in a long downward sloping trend line. If you look at our white dashed line there going off the yearly highs. And speaking of support, I had noticed the 84 level seems like it was an important piece of this chart where price breached it to the downside. So it was looking like we had a triple bottom type pattern forming around that area, and things really fell off through that critical support level just recently. Now, I know that Scott was talking about the 72 area, which is right about where we are now, forming new yearly lows, and it's seeming like this is a point where things could be due for a bounce here, but there's a few things on this chart that kind of concern me a bit here. One is that we did break through this key support. The other is that looking at the RSI, it's right on the verge of slipping into that oversold territory. So beware if that happens, and if price keeps slipping downward, that could be the sign of further downside to come.
Oh, you're probably watching that, right? The RSI oversold. When you look at that territory, could really be crucial, Scott.
Yeah, absolutely. And again, I only do this with options, Nicole. I wouldn't just say go out and buy stock here without sort of hedging. So what I see in the option market is actually a really good opportunity based on reward to risk. And also what I'm doing is I'm targeting that area that Rick just talked about that had been that big support area, like the 83, 84 area. So what I am doing, I put together something, again, with complete identified risk. So I know what my risk is. I'm buying a ratio call spread or a ratio butterfly spread going out to the July 22nd expiration. I'm buying the 76 call. I'm selling 3 of the 82 calls, and I'm buying 2 of the 84 calls. I know that sounds a little bit confusing, but when you think of it, if you just break that down for maybe some beginner option traders here, what I'm basically doing is buying the 76.82 call. To finance that, I'm selling 2 of the 82.84 calls. So really, I'm targeting that same range Rick just called about. I can do that for about $1.15 or so. That's my max risk on this, with a lot of upside if we get any sort of pop.
Right, as you said, targeting that $82 range. Very interesting there. What do you think, Rick, about this trade here?
I think it makes a lot of sense to me. I like that it's defined risk and also offers some upside to this chart, which I think has gotten quite beaten up recently. And AMD is kind of the standout among the field as well. I think I would agree with that. I also like just this type of trade in general, because it gives you the opportunity to have even more max profit if it hits that short strike.
Okay. So let's leave that one there where it is as we note that big sell-off that we've seen recently, but the potential going forward. Let's take a look at another name, and that is FedEx, which has had a recent sell-off. It's not had that 52-week low actually at the end of the month in April. Scott, why is this one on your radar?
Yeah, Nicole, this is one, and let me set this out right now. Long term, I want to own this stock. For the short term, I'm definitely bearish. I've actually talked to Oliver about this and Ben about this. We put on some bearish spreads, and I continue to be bearish over the next month, maybe even, just the rest of this quarter here. So all of the news that came out, all of that good news after their earnings release, that's all gone. The dividend buyback, the dividend hike, buybacks, and in the news, that's all gone. And I just think that FedEx is in the whole industry is in a rut right now. Again, for the shorter term, I love this longer term. So I want to take advantage of a potential downside play here going out for the next 4 to 6 weeks or so. So I'm looking for a target around 195 in FedEx. So I'm buying the August expiration 210-200 put spread. I hope to do that for around $2.75 or so. Again, longer term, I want to own this stock, but only if it gets down to that area right there, which would obviously make this put spread look really nice. I could get out of that and then kind of reverse the position.
It's so frustrating to have to be so patient for something that you like for the long term, but but in the near term, having to put on bearish trades and watching that 50-day moving average, as you noted, is a key point for support. Rick, I'm sure you see that in the charts.
Yeah, and patience is a tough one when you're trading here. And I noticed that there was a key level that stood out to me, that green dashed line, right around 199, 200 or so seemed to be where price often bottomed out there. And looking in the more short term, we are in a bit of a short-term uptrend here, if you see that white dashed line. We did have one notable break below that level on, what day was it? June 13th. But once again, we stopped at that 199 level and resumed this minor uptrend. Now, we did take out those previous highs from mid-March. The next point to watch to the upside, if we do keep moving in that direction, would be near those highs from early January, around 260 or so. That's a good bit away, though, at this point. So in the more short term, we're at an interesting support point today, actually. We're at the confluence of this short-term trend line and this orange 63-day exponential moving average right around the 220 level or so. So keep an eye on that to see if it holds. RSI is also slipping down into the bearish angle here, tilting down below that midpoint at 50.
Yeah, and I think that he started with the green dotted line and sees this trend moving up here of late, but it's just really hard to follow this one and really believe in it. Scott, at least in the near term.
That's exactly how I feel, especially after, coming off of that earnings report, and it just couldn't hold up there. I mean, it took all of a day or two to give back everything and then some.
And the other part of it too is if you have a slower economy, maybe people just won't be shipping as much. How much can they pass the costs on? And some of the key questions that we've heard from a lot of the CEOs, whether it's shipping or gas or trucking or labor or whatever. Let's get to Roku. Last but not least, this one is on your radar. Tell me why, Scott, you're watching this one so closely.
Yeah, Roku is, one of the darlings for a long time. And then just a few weeks ago or so, there's, in the news, was Netflix going to maybe buy them? Are they a takeover candidate? We saw the stock rally a little bit. This is one, again, I think for short term, unless takeover, maybe comes up again. I think this is another one you got to sell on any rally here. Ideally, I'd like to have that sale in or an option spread around the $89, $90 price. So a little bit higher from where it is right here, maybe 5% higher than where it is right there. But there's some significant resistance here. And I just don't see in the near term, again, unless something starts to ramp up again about takeover chatter or anything, I don't see how this stock is really has any upside potential beyond that. So what I'm doing, if we get that rally, because I'm not doing anything right here, I look at putting on an option position likened to, okay, where do I want to sell the stock? Well, I want to sell the stock at 89 or 90. So, okay, what position would I put on if the stock gets there? So I'm buying, or I will buy, the August expiration 85.75 put spread for around $3.75, $4, which is where that would be priced if the stock rallies. And again, limited. I know what my risk is, completely defined. I just think near term here, again, unless we get some sort of other takeover chatter, that this thing is just kind of stuck in the mud.
Right, understood. And, there was some talk that maybe Roku would benefit from Netflix ad platform. Netflix actually crashed during the new Stranger Things that just came out. I saw that in today's headlines. But, there was a lot of hope for Roku. But as you noted, you are selling into the rallies, on any rally on Roku. Rick, what do you think of that?
Well, I mean, the stock is down, 64% year to date. It's difficult to see a lot of potential for upside in a name that's been beaten up so much and has such a distressing fundamental situation as well. And the 89 level that Scott mentioned also stood out to me because that's right about where we are with our 21-day exponential moving average right now. And we're trading a bit below that at this point. So I agree with Scott that we're seeing some significant resistance to the upside as well. We've got our 21-day EMA, but we've also got our 63 EMA, and the top of this recent range that we've been in that coincides with some of the old lows that we saw before that from February and March near 109. To the downside, we've got a floor near about 73 or so. 75 looks to be where price bottomed out more frequently, though. So I'd be looking for any move beyond either 75 to 109 to the far upside there. But, RSI is not giving us a ton of clues one way or the other. It's been showing some weak directionality during the past few months. So we often use the analogy of low volatility being a precursor to high volatility. We're kind of stuck in a range recently. So it's like a soda bottle being shaken up and opened, and it explodes when we do get the breakout in one way or the other.
Yeah, and what do you think from that 75 to 109 range? I mean, they have seen some pops with this stock on occasion. For example, when they were working closely with Walmart, I saw when there was a deal at that point of some partnership, the stock jumped. But as you said, you want to sell into the rallies. Are you watching that same range, Scott?
Absolutely, Nicole. And that's why I'm targeting on this potential put spread down at the 75 range. That's where this spread would max out. I agree with Rick. That's a very significant area. And to get through that 90 area, I think there's got to be some news out there of a deal or a partnership or something. And I just, unless that happens, I just don't see the stock breaking through that.
And Scott, let me ask you this here as we're starting off a new month and a new quarter. Can it be different? Because we're starting off much of the same, which is just trickling down. And it's been a very painful first half of the year for investors and even traders, too, that have been on the wrong side of the trade. How do you feel about the second half of the year, Scott?
Oh, there's no question, Nicole. Trading, this has been one of the first, probably most difficult quarters or halves of a year that I've had in my 30-plus years. So can it be different? Yes. Historically, when the first half of the year is negative like it is, we do see a positive second half of the year, but there are so many external factors right now between the Fed, inflation, the war between Russia and Ukraine that, the only thing that I can predict that I think with any sort of certainty is that we're going to see continued volatility. I do think we can hold these levels here, rallying into the end of the year. We can hope.
So continued volatility, maybe a little Santa Claus rally. We'll see. Boy, that feels so far away, doesn't it?
I know.
That feels so far away. I mean, I've been here for 20 years, but boy, that feels far away. Scott Bauer, thank you. Rick Ducat, thank you. Have a beautiful long holiday weekend, gentlemen. I really appreciate it. Nice big 3 today. Coming up next, we're going to spotlight